My name is Jacqueline Karasha. I am the CEO of Sanlam Allianz Life. And this morning, we have just launched the income drawdown, the Sanlam Allianz Income Drawdown Fund. Ideally, it is a product for Kenyans. Once they retire, they get an option to be able to get monthly income to be able to then sustain their income needs in retirement. Yes. Yeah. So we usually advise, and maybe just to build context around it, is this is a product that is addressing the transfer or the accumulation need once the customer has retired. So we usually then do advise that for any amounts below 4 million, we do give the annuity product. The annuity product is a guaranteed income product that gives stability. It gives, there is very little variation from the incomes, but because of the amounts that are involved, we usually advise that for anyone with a lump sum of maybe 4 million and below, they take the annuity. So this product is for people who've accumulated 4 million and above and are looking to be able to draw down from that fund and eventually still be able to have flexibility in their incomes. Yes. Income drawdown is for both products. Let me just take you back. For both products, they do give income in retirement. An annuity, you lock in your money for the rest of your life. So you give a provider, an insurance company, Sanlam Allianz, you give them money, then you get an income for the rest of your life. That is an annuity. The disadvantage or the downside of an annuity is that you are not able to access additional monies from what you have given us, and you also cannot change the amounts that you are taking from the annuity. So it's usually for those who want just a predictable income. They have probably other sources of income. They just want this to be predictable, safe, and guaranteed. Now, an income drawdown, basically what it does, the customer is allowed to draw down up to 12% of the fund that they have given us. That's the flexibility that comes in. The second thing they are able to do is that they can change the amounts that they access depending on their lifestyle needs or their financial needs. So really that's the difference between the two, and hence that's why we have talked about the importance of awareness and education to the customers as they are taking up the income drawdown fund. It gives flexibility and choice, but it also needs a lot of annual reviews to ensure that you do not draw down your entire fund before the 10 years are over. Yeah. So the regulator actually said that we have 28 registered IDD funds in the market. And we did take time to really understand what are the gaps from the current providers that are there. So the first thing is, as much as there's flexibility, we still want to cushion retirees. We do not want our customers to be able to have their funds depleted due to cycles in the investment cycle. So our guaranteed return of 5% is a differentiator. Not all products have that. Then the second thing is we have taken a very different approach in terms of how we will be doing the advice to the customers. So customers do understand that yes, they are allowed to take up to 12% of their fund on an annual basis, but we take the initiative to do a lot of financial education at the onset. I think you had the regulator say of some customers, some Kenyans who have finished their savings in year 8 and they do not have anything to go home with. So that's the biggest second thing that we're doing, a lot of awareness as we are onboarding the customer. The third thing that we have done is obviously giving very competitive returns. Last year we declared a 15% return. This year we are also looking to do a better return. So that what that does is that our customers then are accessing very good returns from our fund. And last but not least, the stability that Sanlam Allianz has, that we will be here 10, 15, 20 years because we have a solid capital adequacy ratio, and hence we are able to make that promise even for our customers. Yeah. So for more Kenyans to appreciate pensions, we need to really demystify, and I'm glad the regulator spoke about it. The reason why we have a much lower participation. First, the informal sector has not been involved in the savings discussion for pensions. So when we launched Akiba Plus, I talked about it in my speech. That was really the agenda, that before we even talk about income drawdowns or annuities, are Kenyans saving for retirement? And so signing up and giving products like the Akiba Plus, where there is access, there is ease of contribution, that is a start. But secondly, the ability to be able to track where you are on a daily basis is also very important. If you ask any person who saves in a pension fund, how much do you have to retirement? How much do you need to retirement? What is 60 years gonna look like? It's a very far off conversation, right? So that very close interaction is one of the things that we're doing differently, and addressing the accumulation need. There's a huge need to address the accumulation need. But at the same time, there's 2.8 trillion that is in the industry at the moment. Yeah? What happens when those people reach retirement? They need products that they can be able to utilize after age 60. And that's why this income drawdown is very important for us. Yeah. So, and I'll just give you insights from what we've seen now with our Akiba Plus platform. The fact that we allow for a product that accommodates the irregular income really works for that segment. Because remember, this is not a product that will lapse or close down if you do not contribute regularly. Yeah? But over and above that, we have now integrated with mobile money platforms. Specifically, we have just signed up with now Ratiba for M-Pesa to enable them set auto deductions even from their mobile wallets. Because when you leave it to somebody to just remember every month, every week, you need to contribute, it will not probably be sustainable. And that's the continuous conversations we're having, integrating the financial services providers with our platforms so that then Kenyans can actually set standing orders if they want on and off. Again, the flexibility that allows. But also the other thing that we have seen is that continuous communication need, because every time to remind someone, how are you tracking against your goals and what is it that you need to do to catch up on your goals? The platform allowing for that has also really helped that a lot. I mean, the engagement so far tells us that the gap is there and has been there, and digital platforms are really the ones that are helping us close that gap.
Unveil the Sanlam Allianz income drawdown. Congratulations. Let's give them a round of applause. Thank you very much. Thank you very much.
My name is Jackson Guto, the Director in charge of supervision at Retirement Benefits Authority. I'm happy to be here this morning at the launch of the Sanlam Allianz income drawdown. We are delighted to be part of this journey where we are seeing the pension industry grow and new offerings being provided to the industry, the retirees. As a pension industry, we have seen a lot of growth. We are about close to 2.8 trillion as of December of pension assets, which is about 16% of the GDP. And we are proud that this is the second growing industry next to banking. We are happy that the pension industry is sound, everything is okay, members are happy, and we believe that to continue providing the necessary regulatory framework to ensure that Kenyans retire with dignity and have dignity in retirement and have adequate retirement income. As a country, we have moved, seen some tremendous growth from 2000 when RBA started. We have seen moving from a voluntary contribution system to a case whereby we are seeing more participation by Kenyans in pension saving. We are moving towards allowing some flexibility to ensure that Kenyans, whenever they save, the savings can work for them. We are looking forward to seeing early access and access which is guided to ensure that Kenyans meet their daily needs or the immediate emergency needs using their pension savings. And we are doing some public participation starting from next week, the week of 9th, whereby we are seeking views from the members of public and the key stakeholders to ensure that we have policy changes that are more responsive and resonate with the Kenyans and the savers. We are seeing issues of new products, income drawdown being one of the new products. We are seeing post-retirement medical funds, which are being introduced. The regulations are awaiting gazettement. And we are happy that there's active participation by all the key stakeholders. We have the fund managers, we have the insurance companies, we have the administrators and the custodians. They are key partners in this journey. And we are proud with what is happening with the pension industry. We are, by 2029, we are going to see pension savings getting to be more than 3.5 trillion. And we may achieve this earlier than that time because even the introduction of the NSF new contributions is a key catalyst to the growth of the pension industry, and we are supportive of all that, and also the role the pension funds are playing in the development of this economy. We are glad we are contributing to the development of this country. We have seen progressive amendments in the pension industry, and we are glad the Kenya Kwanza government has done as well in terms of in December 2024, we have seen quite a number of amendments in the income tax, providing more incentives. We have seen the contributions allowable for tax allowable contributions increased to 30,000 per month. We have seen pension access after being in the scheme for 20 years or reaching age 50 being tax-free, which is a thing that we have been asking for the last 25 years. It's a good thing because you save and you access your money without any taxation. Is a positive thing. We're also seeing new enhanced contribution rates. I know we may have different perspectives, but the enhanced contributions by NSSF this year being over 6,400 combined, it means that Kenyans are likely to go home with adequate income. And I think that's is aligned with our vision of dignity in retirement. So Kenyans, whoever is working with an income, you'll have a decent retirement income. So we are supportive of that with the increased contribution rates. Whether there's an impact on the retirement benefit schemes, I think there's an option of contracting out, which has been availed. Any scheme that wants to, or employer wants to contract out, there's a provision for contracting out. And we have seen many employers contracting out to remit Tier 2 contributions to their own pension schemes. Of course, there's limited income, and we may see decreased participation in the movement of the Tier 2 contributions to occupational schemes. But it doesn't matter. It means the only thing is Kenyans having a decent retirement income. I think that's the bottom line. We have no other business. Where it's located is not a business for us. The only thing is that to ensure that there's prudence, investment, and management of those schemes. Whether it's in NSF, whether it's in occupational scheme, there must be prudent management of those funds for the benefit of Kenyans. Thank you.